Robots. Robots are already taking our jobs. Now they want to take our investments, or at least our investment decisions. In today's video, we're going to be talking about robo-advisors. We're going to be comparing some of the most common robo-advisors here in Canada, and just really excited to break this all down for you guys and hope it provides some value. I know there's people out there that actually want to invest in the stock market, you crazy goose you. So we're going to break down some of the robo-advisors that maybe you should consider if you're looking for a low-cost, low commitment, low decision-making process. So again, quickly, robo-advisors in one form or another have actually been around for quite a while. So the future's been here for a bit. But robo-advisors have existed, for some time, and they really do take the thinking out of investing. So it's not actually the robots you're thinking of. They're not walking around. They're not on the the stock exchange floor on Wall Street, but they are computer algorithms that essentially take all the thinking out of the decision-making process. So they're cloud-based computing platforms that invest money for you based on your input and strategy. So if you like humans that much, there are hybrid options as well. So you can include robo-advisors with a human advisor and get a blended approach if that feels like a better fit for you. And I'd love to hear too, are you guys currently using any robo-advisors? Do you currently invest in any index or mutual funds? Let us know in the comments section. What robo-advisor do you use? What index funds are you investing in? Or what mutual funds do you enjoy paying high MER fees on? So before we get into robo-advising options, here are some of the pros and cons just quickly, just so you guys get a rough understanding of what robo-advisors are all about. So pros, robo-advisors generally have low fees. They use liquid, tradable ETFs. They can create diverse portfolios based on personal specifics, and they can automatically rebalance based on how the markets are fluctuating and your personal preferences. And they're generally tax efficient. So cons of robo-advisors, typically they're only using ETFs. So you're not going to be able to directly invest in equities. You can't always change the asset mix on your own. So depending upon the robo-advisor, you may or may not have a lot of customizable options. And they generally lack the personal touch of a human advisor. So you're certainly not going to get to have a conversation, have a coffee on Zoom or anything like that. And especially in regards of organizing your assets around major life events. So it's a lot more difficult to explain to your robo-advisor that you're going through a divorce than that human advisor. So again, it's important to understand the dynamics and situation you're in, and robo-advisors won't always be a perfect fit for everyone in every situation. But if you're new to investing, or you want a hands-off approach, or you don't want to rebalance your portfolio, and be responsible for that, robo-advisors could be a perfect fit for you, depending upon your goals as an investor. So otherwise, you may be better off investing for your own or speaking with a human advisor. So these two options are better suited for those who, like to do their own research, like to kind of roll up their sleeves, get into the details of their investments. Back when I was originally starting investing, I directly invested in equities myself throughout university, and just the first 3 or 4 years post university. I thought I was investing back then. I was actually just gambling in equities, but it's one of those things you don't realize it until with hindsight. So also robo-advisor is great because it can actually take a lot of the emotion making decisions out of your hands. And that's where most of us fuck up when it comes to investing, is we get too emotional and we let our emotions hijack our thought process. Very dangerous. And so robo-advisor presumably shouldn't get nearly as emotional as you are about your money. So now let's list some of the best to worst robo-advisors. And this is a very subjective process, so don't take it too personal. If you're one of these robo-advisors and you're listening right now, please don't come after me once you pass the Turing test. But it's possible that the last option on this list is best suited for you. So again, just because we have to make a list doesn't mean you should just ignore the ones at the bottom of the list. But let's jump into it. Wealthsimple. They're one of the most common ones you're going to hear about here in Canada. Very popular. They've got YouTube ads everywhere. And actually, shout out to Griffin Milks. I'm pretty sure that you're getting sponsored by them because I saw you in one of their ads. That's awesome, man. So their fees are competitive, but slightly higher than some of the other options. So you're going to be looking at probably 0.4 to 0.5% per year, and a 0.2 to a 0.25 MER. So that's a management expense ratio, if you guys are unfamiliar. I've actually done videos on MERs way back in the day. If you want to jump back a couple of years into my content, where we really discuss the costs and consequences of those, because it doesn't sound like a lot, but it can pick away at you, especially once we get closer to 1% or higher MERs. So again, important that you understand that there's no minimum investment. So again, if you're just getting started, you just want to dabble, you just want to get your feet wet, this is great to not have a minimum requirement. And there's only 3 risk-based investment options. So there's a conservative, balanced, and growth. Great starting point, but again, not a lot of customizability. Best known robo-advisor can trust their track record. So again, you can go back and see the actual track records, and it's got a sleek interface and it's very easy to use. So again, if you're looking for just a hands-free process with an app, it's going to be very enjoyable. And there's a free tax loss harvesting, so it also takes that into consideration. Now let's move on to Quest Wealth Portfolio. So they've got the lowest fees of 0.2 to 0.25 per year and 0.19 average MER. They've got a low minimum investment of $1,000 and 5 risk-based investment options. And it's actively managed by humans, which may turn some off. But again, just be aware of that. Then we've got RBC Invest Ease. So slightly higher fees at 0.5 across the board and MERs of 0.11 to 0.3. Depending on the portfolio size, your minimum's 100 to start investing. So really not that prohibitive. If you have less than $100 to invest, I would encourage you to just save up until you've got $100 anyways. It's not going to make a big difference whether you invest today or tomorrow when it comes to $100, but it is great just to have some money in the market. So this is something that I had the benefit of experiencing at a young age. So when I was born, my mom actually worked for 3M Canada. And at that time, 3M Canada actually gave each of their employees that had a child a share in that child's name in trust. And so because I had that share growing up, my parents every now and then would make a joke that I own a share of 3M whenever they'd open up the newspaper. Kids ask your parents, but newspapers were these paper things that had news in them back in the day before I started my YouTube channel with news updates. And then they also had like a stock section. So I'd literally open it up, go find the ticker for 3M, which was MMM. And I would just look at that. And now I didn't really understand what I was looking at, but even just knowing it existed, slowly through osmosis and curiosity, I started discovering and learning more. And so one of the things, again, if you guys go back and watch one of my videos on the war on Christmas, because Christmas is just a waste of money and consumerism. But one of the cool ideas, if you're looking to give a kid a gift, I really encourage you to enroll them in a true drip program here in Canada. And one of the best websites, the best website, not even one of the best website to go to is dripinvesting.org. That's where I originally bought all my paper share certificates to get them in my name, not the street's name. But anyways, that's a whole nother discussion for another day. But RBC's got an easy to use platform. You've also got access to human advice when necessary. So that's very important. And you can use RBC iShare ETFs, which is the largest offering in Canada with 150 ETFs. Then we've got BMO's Smartfolio and slightly higher fees, 0.4 to 0.7. The MER is 0.2 to 0.35, $1,000 minimum. So this, again, a little bit more prohibitive, and 5 portfolio risk options as well. We've got CI direct investing, so slightly higher again, 0.35 to 0.6. MER 0.19 to 0.37, $1,000 minimum again, so important to be aware of that. And they've got 5 ETF portfolios and 3 for private investment portfolios. Then there's other companies as well, like Just Wealth. We've got Invisor and Nest Wealth. So that's just the tip of the iceberg when it comes to robo-advisors. We've got a ton of information in the video description down below. If you guys want to check it out and learn more, really encourage you guys to do so. But I'd love to hear, are you currently using a robo-advisor? Have you looked into a robo-advisor? And if you did, why did you decide to go with one? Or why did you decide to manage your portfolio yourself? Or did you decide to go with humans? Let me know in the comment section, because we really do want these live videos to become a two-way conversation. And before we wrap up, I forgot to actually pull up the comments, so I don't know what comments you guys got, but really appreciate you guys watching today's video. Smash the like button, hit subscribe if you're new to my channel. Let me know, and I'll make sure I respond if you guys comment on this video post recording. So appreciate you guys, and we'll see you Monday for the next live.